Guys, if you are brand new to trading, you've thought about getting into it, or if you're an established trader and your strategy lately just simply isn't working, I either want to show you or remind you if you've done this before about the 5 minute opening range break. Now, this has been a strategy that has been around forever. Someone didn't just invent this. I know there's a lot of videos out there, but this strategy honestly has been around since the 80s and 90s. It's older than a lot of the people watching this video, which makes me rethink things. Anyways, doesn't matter. I'm going to show you using TradingView the most simple way to mark this out, and you literally can automate it. You don't even have to do it yourself. I'm going to show you which indicator to download, how to set up that indicator, how to make your chart look, and then just simply watch the chart and wait for the 5 minute opening range break and retest, and then make your entry. We'll go through the backlog with some back testing on TradingView replay mode, show you when it plays out and when it doesn't, and let's get into it. But before we do that, I appreciate all your guys' support. I know that there are a lot of creators on YouTube, and I would certainly be grateful if you were to subscribe and continue watching, like the video, comment, and if you guys are so inclined, the first link in the description is my Discord. It's completely free. It's a community of traders. We have over 500 people in there now. We talk, we socialize, we share trades, and it's completely free. It's a very healthy community. It's not toxic. Guys, so today we are in TradingView. We are looking at NQ, which is very popular for trading futures. I mainly see NQ, GC, or ES. This will work on anything. Here's the first thing you want to do. Before you even get going on the chart, you need to come up here to this indicators tab right here. Click that. And since you won't already have it favorited, right here in the search bar, you need to type key levels. It's going to bring up, don't look at this one, it's already favorited, but it's right here. Just a little bit down, it's got 2.6K on the reviews and the ratings. It's key levels by Liquid Trader. All you need to do, click the star to favorite it and add it to your chart. Now, it's going to load, and I don't recommend keeping these on if you're brand new. If you're a seasoned trader, leave it on, whatever you want to do. Let me show you how you customize this, though. In the top left, you have your indicators right here. Highlight the key levels and scroll over to this settings icon. It's then going to bring up this tab right here. Now, when we're focused on the opening range break, uncheck all these boxes. You're only focused on one box here, and it's this one, opening range. Change this from 15 to 5. If you're trying a different opening range break, you can set this to 15 if you want. It doesn't matter. You can put it on whatever opening range you would like to see. For this one, we're going to leave it at 5. The only other thing you need to do is scroll all the way down to the bottom and make sure this is set for the New York session open. That's it. Once you click OK, no matter what, it's going to automatically mark out this 5 minute opening range break for you. You don't even have to go scroll down, come back, find this. It literally automates it. Just leave this on. Right now, this is your 5 minute opening range break, and it stretches all day long. Now, you can come down here. Once this is on, you have your break. You come down to the 1 minute time frame, zoom out a little, and when you scroll back, you'll see right here, your 5 minute opening range break carries over from your 5 minute chart, and now we're looking at the micro details and movement of today. Now, the 5 minute opening range break works like this. You're waiting for a break outside of this bottom line or this top line. So in today's scenario, it clearly broke down below. If it were to break above, you would be waiting for it to come back in and touch the zone over here, the complete opposite of this. Obviously not the same time frame and structure, but since this broke out below, we're now waiting for it to come back and touch the zone and see what it does. So the 5 minute opening range is this. It breaks down below. This is what we want. It starts correcting. This is also what we want. It kind of chops right here in the middle. Is it going to break out all the way? Buyers are saying no, it's coming back up. It comes in and touches the zone at the bottom, and now we need to wait and see what happens. To qualify technically for our 5 minute opening range break and retest, we've had the break, and now we have the retest. Now we need to see what it's going to do. If it drops back down below, that's our sign to make our play. So it retests the zone, chops around for about 4 minutes, starts going up. Buyers look like they're in control. And you can even see right here, it looks like it's going to break out of the zone, maybe trend this way and completely flip on us. But sellers come in and say, absolutely not today. They then big candle push it down, a lot of volume, and it just breaks back out below the zone. So now we had the opening break, we had the retest, and now we're breaking out down below again. This range right here, this is our signal to enter. You're obviously only going to be seeing these in live action. You wouldn't know that it's almost going to touch here. Just following the path, this is where you would enter, right in here or here, whichever you prefer. So is what you would be wanting to do here is, let's just say you entered in somewhere in the middle. Let's just split it and say you entered in right here. This is your short. You want to take your stop loss to about the middle of the zone, somewhere in here. You can kind of, some people go to the top of the zone to make sure if it does come back and test the zone again, that they don't get stopped out. I personally, when I do it, set mine to about the midway point. Somewhere in here is fine. That's about 61 points. And I always target a 1 to 2 risk to reward. So if my stop is 61.75 points, let's call it 62 for easy math, I'm going to want my take profit to at least be 124, which is going to be right around this range or so, give or take. So then you can see, I know I'm recapping, but if you're a beginner, I'm just going to keep repeating it. 5-minute opening range, we break out, we come up and retest, we break back out of the zone, so I have my valid entry, I enter in, I set my stop loss, and I see what happens. It then breaks all the way down through my take profit, and we would have entered this roughly around 10:22. And by 10:45, not even 25 minutes later, this big red candle right here would have pushed us out of our take profit, and we would have risked 500 to make 1,000, and our day would have been done. And I'm on the West Coast, so this would have been 7:45 in the morning before most people are even in their office. I already would have been up $1,000 today. But now you're probably thinking, oh, yeah, of course, like you pick the chart because you're looking at it. Like, let's just pick a different day in replay mode. Hand to God, never even looked at this day before. Let's go July 16. Let's go at 9:30. That's the New York session open. And let's go ahead and take a look at what this one does. So this candle here is 9:25. We need to advance one time to see what this candle does. Massive. So we'll take our rectangle tool. We'll mark the top wick and the bottom wick, and then let's just drag it over here. Let's probably zoom out a little bit more, and then we'll pop down to our 1-minute time frame. That is a huge opening range. So let's see what happens here. I will speed this up because we're on the 1 minute to a 3 times speed. Let's see. Looks like right here we maybe already had a breakout. Let's see what happens. Okay, so right here, this is at, I'll zoom in a little now. This is about 20 minutes into market open. We have the opening range set, high and low, and then we have the breakout down below, just similar to what we looked at on the 13th of November. So now let's see if we get a retest. Okay, so right here at 10:30, we get a retest and then an immediate seller step in of they're like, that's not happening. So all I need to see is another candle close completely free of the break, and then I'm going in. So I'm going to slow this down just so I can see here when that happens or if that happens. Okay, there, we get our break. Somewhere in here is where I would have went in. So let's just take our short. Let's just say we got in more towards the bottom. Let's put ourselves at the disadvantage here. I would have set my stop loss at the middle point, which is 52. So I want this to be at 104. So now I'm going to stretch this over. I'm going to move this back to 3 times. And let's just see if this would have played out in our favor. We're chopping around. I'm getting nervous. Okay. Oh, okay. And we're out. So right there, it would have ticked, even though, like, you see where it lit up green, this tick right here on this big wick candle would have actually knocked us out right there. We would have hit our take profit. So that right there would have been another day where you could have followed this exact opening range break. There it is. It breaks out below. It comes back. It just has to touch the zone. You don't need a candle closure in here or anything. It comes back and it touches the zone. Sellers immediately defend it. It moves around. The next clear break, we would have went in. And again, I said, let's put ourselves at the disadvantage. Like, we got in at very last minute part of this 1 minute candle. We entered low, stop loss to the midpoint, and you do a 1 to 2 risk to reward and let it play out. It chopped around, rose up back into the zone, big, massive seller supported candle. Then it comes back, chops around, makes one more push, and then sellers are finally like, hey, we've had enough of this game. Not happening today. Boom. So we would have entered here at 10:35, and we would at 11:22, about 50 minutes later or so, we would have been up $1,000. All right, and just one more time for confirmation, replay mode again. We'll select our date. Let's go back. I don't want to go that far back. Let's go June 3, and we'll go at 9:30, which I think it brings me to 9:20. Oh, I need the 5 minutes, sorry. Yeah, so we're at 9:25. So I'll slow this down. Let's go one more tick. So this right here, another big range on NQ, a massive swing. We'll mark it out, drop to the 1 minute. Let's truncate this so we can see better again, just like last time. And let's see what happens on our opening range break and wait for a retest. So we're chopping around, goes below, doesn't count, goes up. Are we going to break? We're out. So we got our breakout right here. This would qualify as a break of the opening range. We're definitely clear. So we broke out. We retest the zone and it's coming back. Now I'm looking for a breakout above. So I'm going to slow this down just in case it happens quick so I don't miss it. I've never seen this day, so I don't know what this looks like at all. So right there, if you're sticking true to the range and you're watching the chart exactly, you would have actually went in on this one because you have your breakout and this is the next candle closures right here. So again, following it, we would have went in on this one right here. I would have set this at the midpoint, which is 47.5. So that means this would have been 95, 96, close enough. We'll know if we get there or not. So now I'll take this to 3 times and let's see what happens. It's chopping around. We're not really getting any movement one way or the other. That's not looking good for me. These are fine. Come on. We're trending better. We're getting there. It's looking good. Keep going. Man, I got to extend this over. This would have been a fun one to be in. You wouldn't have been stressed out or anything, just waiting, watching. I would have got impatient and closed it. I bet I would have got out of it. I've been like, I don't want to be in a trade this long. Oh, we're so close. Right there it is. So you would have entered this trade at 10:14 and you would have got out of it at 12:17. You would have been in this trade 2.5 hours almost. If you would have held out on this long and just let it go, or I guess it's under 2 hours, excuse me, right at it. Again, this one would have worked. Opening range break is marked, comes here, it breaks out, it retests the zone. Then you just wait for confirmation back. It goes down to the midline, comes back, breaks out. You would have waited for this candle closure so you know that it is out and closed above the zone. Technically, this is the strategy. Right here, when it moved over, you would have went in right about where we are, and it again would have worked. You would have been in a long trade, but you would have had a 1 to 2 risk to reward, and you would have hit your take profit. So guys, that right there is the 5-minute opening range break. Now, you can go back test this all you want. You're going to find some losses. You're going to find some wins. But I do tell everybody this that I talk to. You have to remember, if you target a set risk to reward, I know not everybody trades that way, but if you have a system like the 5-minute opening range break and you target a 1 to 2 risk to reward, you literally can go 50-50 and still make money. If you took 5 trades and you won and 5 trades and you lost and you were risking $500 a piece each time, on your 5 losing trades, you would have lost $2,500. That sucks. On your 5 winning trades with $1,000 on your 1 to 2 risk to reward, you would have made $5,000. So did you lose 5 and lose $2,500? Sure, of course you did. But you also won 5 and you got a 1 to 2 risk to reward, so you made $5,000. You would have netted $2,500, and that's only taking 10 trades in a month out of the 20 trading days. So not every day the break and retest on the opening range is going to present itself, but on the days that it does, if you can go 50-50 and you use a risk to reward system, you will be profitable. So if you guys have been looking for a strategy that is insanely simple, it does not get more simple than that opening range break I just showed you. If you're brand new or if you're a seasoned trader and you just have something's not working right lately, go back to the KISS method. I tell everybody that. Keep it simple, stupid, and I'm stupid. So keep it simple, make it easy, execute. You're looking for 2 things. Mark the range. That doesn't count as a thing you're looking for. That's just something you have to do. You're looking for a breakout, you're looking for a retest, or the other way, a breakout and a retest, down or above. Once it retests, wait for that 1 candle to close outside of the range in the same direction it broke out and make your move.